Hello and welcome to Caching Waves. This is your Elliott Wave update for ICP. Now on the daily here, we have potential 5 waves complete, but I'm expecting a extended 5th wave up to around $24. Can clearly be proven wrong. We do have slight divergence on the daily between the 3 and the 5. Now down on the 4 hourly. Main reason I think we need this extension is the last wave we got, and we are consolidating sideways. So that does switch probabilities that we need at least another wave to the upside, whether this becomes an A, B, C, or a third wave of the 3rd and the 5th. We have reached minimal targets. We went through the 1.618 for our 3rd and the 2.382 for our 5th. So it is possible that we're complete here. Just to reiterate that fact. But because of this reaction, I'll go down to the hourly, and the sideways nature, I do think we need this at least one more move to the upside, whether that's a 3rd wave where we make higher highs or a C wave where this is all part of the same correction, A, B, C, and that would be our A wave to the downside if those larger 5 waves are actually complete. So I was in this yesterday, just got sniped out of it. Reason being, I don't like to let expanded flats run out. And I'll explain why. So originally my entry was like this. Oh, sorry, need it long. Eventually my entry was around here. Stop at this low, targeting that $24. It's about 3-4 to 1, I think. And as soon as we made this higher high, what I did is raise my stop to this low, and I just got sniped out of it. Reason being, this could have been a bunch of nested 1-2s. 1, 2, 1, 2, and then we literally just absolutely collapse like we had that sell off the other day. I didn't want to let that happen, and in majority of bullish markets you usually protect the A wave low here in running flats. The only way you lose is if it becomes an expanded flat, if the count is correct. So that's something I do pretty much every time, and then I reevaluate. It's not too big of a deal to me. I know a lot of times when I'm entering a trade setup because I try to get really good position sizes that I might have to take 2 or 3 shots at it, and I'm comfortable with that. If that's something you're not comfortable, you're not chart watching, I would do whatever you're comfortable with, because if you just bought this at the 382 like normally, stop down here, and you didn't touch it, I mean, your position's perfectly fine. I'm just a little more active, so I'm okay with multiple entries. So my strategy on this one currently is a few different things. I can see this as either a WXY or a C wave, where we have a contracting diagonal here to end. It's not the prettiest, but it's definitely in play. So right now I have a buy down at the 50, re-entry, stop at this low, targeting $24, which I have not entered yet. So that's a 7 to 1. Risk reward, stop at this low. I also have a trigger entry on the go. So whichever one of these fills first, I'll cancel out the other. And what that one is if this is a ending diagonal, we should start trending to the upside similar to over here. So the way I do that when there's a potentially completed pattern is I look for the important level that breaks, and that would be this 4th wave in an ending diagonal or a B wave in a complex correction. both the same area. So what I do here, just so I don't miss it, is I have a trigger order one tick above that level, and if I get entered into it, if it moves up, triggers my entry, it's a market entry above that area, then my stop will go at this low, and I consider this to be a completed correction, as you can see. And you can see this one's, this is why I do those things. So whichever order fills, it's a pretty good trade. But if this one fills and we just start trending, I don't miss the trade, and I actually can position up, and I actually get almost 11 to 1 compared to 7 to 1. So there's a little view into some of my trading strategies. Obviously, the 7 to 1 is going to win more often than the triggered one, because it allows for more corrections to fill out here. Say if we come up and then we snipe back down and then we go, which is obviously possible as well, that trade would lose. But my assumption is this correction here is almost complete if this count is going to stay intact, and we should start trending similar move to this one. All right, guys, so absolute important pivot to hold is 10.33. If we break above that, or sorry, below that, we are breaking below the 618 of this move to the upside again, which is very bad for the bulls. And we would most likely be in the second wave of an A wave to the downside. So just keep that in mind. All right, so those are the two entries I have, trigger entry and just our standard fib level entry. Currently, that's the only one I got sniped out of, unfortunately. These are all the ones I'm currently in. As you can see, ARB is doing the best. I don't think I made a TIA video for you guys. I'll do a TIA video today. I'm not sure. Anyways, I'm in TIA as well. But these are the ones I'm in. A lot of these I've updated the stops on, so I can't lose too much. But if you want to check those out, I'll try and update those today as well. But that's the strategy I'm going for here, still targeting that $24-ish. Stop at this low to change probabilities to the downside. All right, guys, thanks for watching.